Financial Markets and U.S. Banks, your 2026 Private Investing Playbook. Hey there, investor. Welcome to the ultimate guide on navigating the financial markets and U.S. banks for private investing in 2026. I'm your host, and if you're sitting on a portfolio, whether it's 6 figures or 7, you're in the right place. This isn't your grandpa's boring finance lecture. This is the real deal. What's actually moving the needle right now, where the smart money is going, and how everyday high net worth folks like you can win big, or protect what you've built. Picture this, it's January 2026. The S&P 500 just closed out another strong year. AI is no longer hype, it's the engine of the economy, and the Fed is finally easing up after years of playing inflation cop. But here's the twist, the easy gains are over. We're entering a year where selectivity wins, diversification is your best friend, and knowing which banks and strategies to lean on could add serious alpha to your returns. Ready to level up? Let's jump in. First, the big picture. The U.S. economy in 2026 is like a high-performance engine that's been tuned up. Goldman Sachs is calling for 2.6% GDP growth, better than most expected. Fueled by tariff relief, fresh tax cuts from policies like the One Big Beautiful Bill Act, and massive AI capital spending. J.P. Morgan sees a 35% recession chance but stresses sticky inflation as the wild card. BlackRock talks about balance sheet divergence and widening global gaps, meaning the U.S. is still the star player on the world stage. For you as a private investor, this translates to real opportunity, but with sharper edges. Bloomberg's massive 2026 Outlook compilation from over 60 firms shows almost universal optimism on AI. Fidelity calls it the defining theme for equity markets. Yet risks loom: geopolitics, trade barriers, a softening labor market, BCA's top worry. The message? Don't chase the crowd. Be strategic. Be selective. And that's exactly what we're going to unpack. Let's start with stocks. The heartbeat of most private portfolios. The S&P 500 wrapped 2025 around 6,845. Wall Street's crystal balls are mostly bullish for 2026. Goldman Sachs targets 7,600, about 11% upside, driven by 12.1% EPS growth from AI productivity and procyclical plays. Morgan Stanley goes bolder at 7,800, 14% gain, betting on earnings acceleration from tax relief, Fed cuts, and AI efficiencies. Even Bank of America, more cautious, sees 7,100, a modest 3.7% rise but still positive. Why the confidence? AI capex is exploding. Hyperscalers could spend over $500 billion in 2026 alone, per Goldman data. That's powering semis, data centers, power infrastructure. The Magnificent Seven might broaden or rotate, but tech remains king. Schwab highlights international stocks looking cheap versus the S&P, with earnings acceleration abroad. Oppenheimer sees broadening leadership, beyond megacaps into industrials, financials, and healthcare. But let's be real. After 3 years of 15-20% plus gains, 2026 could feel choppier. CNN warns smaller returns ahead. LPL notes historical post-big year averages around 8%. Volatility? Expected, midterms, tariffs, potential Fed pauses. Goldman sees value stocks, cheaper relative to earnings, shining early, especially cyclicals like Russell 2000 small caps, consumer plays, and non-residential construction. Your move? Dollar cost average into quality. Diversify beyond U.S. megatech, add international exposure, value tilts, or sectors like financials, steepening curve helps, and healthcare, demographics rock solid. Avoid FOMO on overvalued AI darlings if margins compress. This is an investor's market, not a gambler's. Now, bonds, the ballast in your portfolio that's finally earning its keep again. After a stellar 2025, Bloomberg Treasury Index up greater than 6%. 2026 looks solid but more income-driven than price-pop-driven. Schwab expects the Fed to cut to 3.0 to 3.5% Fed funds range, 2 to 3 more 25 BP moves, as labor softens but inflation sticks above 2%. LPL sees 10-year Treasury yields range-bound 3.75 to 4.25%, with returns from coupons, not big capital gains. Morgan Stanley favors government bonds early, rally on cuts, then high-yield outperforming IG as AI financing spikes issuance. BlackRock loves the belly of the curve, intermediate duration. For ballast and income. Vanguard emphasizes short to intermediate treasuries for diversification. If AI delivers, bonds hedge downside; if it disappoints, they provide real yield. Transamerica targets 3.75% on the 10-year by year-end, steepening curve. Opportunities? High-quality IG corporates, munis, tax perks huge for high brackets, securitized, MBS, ABS, even emerging market bonds for yield pickup. Risks? Fiscal deficits, $38t plus debt, more issuance pressuring yields higher. Credit cracks in autos or elsewhere, JP Morgan's cockroaches warning. Pro tip: build bond ladders to lock yields before further drops. Favor intermediate duration. Add EM or munis for tax efficiency. Bonds aren't sexy, but in 2026, they're your stability anchor. Want more firepower? Alternatives are where private investors shine in 2026. We're at an inflection point: blockchain, private credit, real assets exploding. World Economic Forum calls digital assets, crypto, stablecoins, tokenized RWAs, foundational. SVB sees institutional verticals, M&A records, RWA tokenization. Grayscale highlights bipartisan clarity pushing DeFi mainstream. JP Morgan loves senior secured direct lending, 200 bps over loans. Private equity? Access via banks or platforms, non-bank lenders thriving as traditional banks stay constrained. Real estate tokenization fractionalizes deals. Gold/precious metals? Safe haven play amid geopolitics. But caution: illiquidity, high fees, volatility. Only allocate what you can lock up. Use for true diversification, not speculation. Now, the banks that power private investing. In 2026, the elite players dominate. Global Finance crowns Goldman Sachs best private bank in North America, record capital raising, AI integration, one bank, seamless experience, wealth planning, trusts, alternatives. JP Morgan Private Bank wins worldwide. Scale without sacrificing relationships, access to exclusive deals, global coordination. Morgan Stanley excels in advisory/wealth arm. Citi shines for digital/global solutions. Raymond James for personalized specialists. UBS for athletes/entertainers. BofA Private Bank for comprehensive plans. Forbes and others rank teams, focus on low client-to-advisor ratios, alternative access, tax/estate planning. Need $10 million plus? Goldman, JP Morgan, Citi open doors. Under? Schwab, Fidelity, or regional like Wells Fargo offer strong digital/branch combos. Strategies: use private banking for bespoke lending, favorable terms, exclusive alts, family office coordination. Compare fees, access, personalization. The right bank isn't just a custodian, it's your strategic partner. Regulations? 2026 brings reset, digital embrace, capital reform, Genius Act for stablecoins, Basel tweaks softening GSIB burdens. ABA pushes deregulation, trim 1071, etc. Risks. Compliance complexity, state variations. Bottom line: stay compliant, but deregulation could unlock more innovation. Risks in 2026. Volatility from geopolitics, tariffs, labor weakness, AI bubble fears, fiscal blowouts, Fed independence questions, Powell probe drama. Schwab flags credit concerns, potential shutdowns, Supreme Court cases. But positives outweigh: AI supercycle, policy support, productivity gains, international bargains. Your playbook: diversify aggressively, equities, selective growth/value, bonds, intermediate/high quality, alts, cautious allocation, cash buffers. Use dollar cost averaging, rebalance quarterly. Leverage bank tools for access/tax efficiency. Stay long-term, bull markets reward patience. We've covered a ton today, from AI-powered stocks to bond ballast, private credit upside, and elite banks like Goldman and JP Morgan. 2026 is shaping up as a year of selective winners, quality over quantity, income over speculation, diversification over bets. I'm passionate about this space and ready to help you dig deeper. Whether it's portfolio tweaks, bank comparisons, specific alt strategies, or tax angles. Just drop a follow-up question or reach out. I'm here to break it down personally for you. Thanks for joining me. Here's to smart, confident investing in 2026. Stay sharp, stay diversified, and let's make this year count. Talk soon.